Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Wednesday, and we're at the 18th of October, 2023. And the time as I'm talking to you right now, exactly 6:25 p.m. Central Time. So you talk about difficult markets. This is it with all capital letters. Don't kid yourself. It doesn't get more difficult than these type of markets right now. Most of the time now, your weekly charts will have one direction, your dailies another. You're scratching your head other than some of the wartime markets like the gold on the run that it had or the dollar, but not running now, the prior run the dollar had. But there aren't a lot of markets that are adding an awful lot one way or the other. Take the gold market away, and I'm talking upside. That's pretty much it. On the downside, we keep adding to the downside in the bonds and the notes. The reason is not the Federal Reserve. Get that out of your head. It isn't them right here. It is the U.S. Treasury Department. And unfortunately, this isn't going to end. Why? Who do you think is going to fund a lot of the cost of the Israeli war? Who is funding the cost of the Ukrainian war? That doesn't mean that we don't have allies in Europe. We do, and they're putting up costs. But who's the biggest contributor? Uncle Sam. For Israel, who's going to be the biggest contributor? Uncle Sam. Now, today the president threw a piecemeal out there, $100 million, as he flew into Israel, and that's for the Palestinian people. And then he did another good gesture. Now, I don't want this to sound negative. These are good things the president did. You hear what I'm saying? Don't write me anything facetious. He made something out of nothing. Unfortunately for him, he was going to meet with the heads of state of Jordan, the head of state of Egypt, and the PLO. Nothing came about once the hospital was hit. Who hit the hospital? What happened? I'll let you read the news on that. I don't have to do it. First of all, I wouldn't know how to read these forensic papers to begin with. All I know is it happened, and more of this is going to happen because it's called war. And in war, there are no innocent people that don't get hurt. They get hurt. So as we look at where we're at, the president did get 20 trucks. It's not many. It's a symbol. Egypt is allowing 20 truckloads of, be it medicine, food, I don't know what's in the trucks, to go through the border. So now they got to fill in the holes in the ground. Remember, they said they couldn't bring any trucks. They had to fill in the holes where, I guess, shells had landed. The second thing is, how are they going to do the security of the truck to make sure what's in it is what's supposed to be in it? The next thing is, when they bring it into Gaza, how do they make sure that it doesn't fall into the hands of Hamas? I can't answer any of that in any manner, all right? But that's why it's 20, not 200 trucks. Do you get it? I'm sure what I'm saying to you is right. I bet the house on it. There's a reason it's a small amount. It's a test. Next time there may be 50. We don't know. They've got to make sure whatever they're going to do is done the right way. That's not the key. The key is the president got something done. He got trucks to come over the border because that border was sealed shut. He's giving $100 million. They got to make sure who's the money going to. It's this in a pile that's needed this big. You know that. I know that. But again, it's the beginning of something. You and I are going to be paying for that. If you're an American, your tax dollars are going to work. It's that simple. When we take a look at the stock market, it's earnings season. The earnings are a beat. Don't you kid yourself. The company or two that isn't doing well is met by 4 or 5 that are doing phenomenal. So far, it's a beat. Another event happened today. The New York Federal Reserve came out with a report on student debt and the impact it's having on the economy. I was floored when I read it. It is not what I thought it was, and that means I'm wrong. I had been led to believe that when these loans were going to be paid, my head, you were going to pay somewhere between, as a student, $100 to $300 a month. It sounded like that was the amount because we had heard it's going to hurt discretionary spending. It's going to cause cutbacks. You can't buy a car, maybe. You can't do this because these are young people. These are called student loans that they're paying back. Well, as it turns out, what are there, 28 million or so of these loans? The average person paying back is $56 a month. $56. They spend more than that on a concert ticket, by a lot. That isn't going to impact the economy. It's like every month, $1.6 billion. Don't get me wrong, $1.6 billion. We wish we were billionaires. But for a whole economy, that's how much they're paying off. Do you honestly think $56 is going to change their lifestyle? Not saying some people aren't more, some less. That's the average, so there's some less. Interesting. All right, when we take a look at where we're at, if you'll recall what I said, I put on what's called Fibonacci count, and I said that if I'm right, and that's always a big if, the most I'm looking for in the first bounce in the market is about 38%. That is the first Fibonacci count. The second would be 50. The next thing I told you before we even had this happen, I think we've made a trade bottom in here. And until it's taken out, that is the hat I'm going to wear. Now I'm looking at a market that's getting its first set tonight of sell signals on the swing line since this rally began. I now have, or the chart has, lower highs, lower lows. The market is fighting at or under the 18-day average, so the bias is going down. The first major support in the market under this will be the 200-day average at 43.18, and the Bollinger Band comes in around the 42.84 level. So bears have regained control. Can they get the market much under the 200-day average of support? It's going to be the big question. When you take a look at momentum to the downside. Now, we go to the NASDAQ. In the NASDAQ, the market has faltered against the combination of the 100-day average and the Bollinger Band. That's what it should do. It's exactly what I teach in my charting course. Now, if the market can stay under the 18-day average, I get an all-out bear signal. The bear signal objective is down here, which would be a challenge of those lows that we talked about. So do I think it'll work? No. Do I have reason to think that other than I think that the low is in place here? No. Is it a difficult trade? Yes. But as a trader, if you close under 15,035, you're 4 points above it right now. The bears take control, and that is a possible target. When you come to the Dow, don't have that pattern. What you have is the classic. I want to use this in so many words, like a classic car, a classic beauty of something. You went up, made your first challenge of the 200-day average in the Bollinger Band, and you set back. It's exactly what I teach. The support, the first line, is the 18-day average. How many times do you hear me say, if you're down, you go up and you fight at this number. If you rally, you pull back and you fight at that average. It's what's going on here. It's what's going on here. Do you disagree? And it's what's going on here. You may disagree, but you shouldn't because it's correct. When you take a look at the Russell, this has been the weakest of all of the indices. It today threw itself back into the downtrend. Lower highs, I believe it's lower lows there. It is oversold. The resistance on the way up, remember, the others I'm talking support. The resistance on the way up here is 1765.35, and if the pros are going to sell it, they'll want stops over the 72.90 area that it just hit. Got it? In the 10-year note, you're under the Bollinger Band. I teach you never put on new shorts under a Bollinger Band, and I teach that if you're in the market and you're not embedded, I think the pros take their money off on that test. So that happened not today, it happened yesterday. I'm content with that. When you look at the 5-year note, it's the same thing. You're dropping. You could go lower. That doesn't mean that staying short under a Bollinger Band is the right thing. Is you only stay under it 5% of the time. However, let me teach you what you have to worry about. And I want to use the word worry. If you latch on, as you're doing right now, to the Bollinger Band, with each day hitting it, day 1, 2, 3. Agreed? I can go back and do this on the 10-year if I want as well. Just to make a point. You get what's called, if it keeps doing this another day, the gorilla glue trade. What does gorilla glue mean? Well, for most of us, that don't buy Flex Seal. For most of us, Gorilla Glue was the glue we'd go to. It's strong as can be, and we're going to put it on. As I said, maybe I should be talking Flex Seal. I still have a hard time believing that dot will support 2 or 3 tons. I wouldn't stand under it, but he does it on TV. Could be magic. In any case, if it keeps doing that, you can take this market and run it longer to the downside that you think. It would fit in then with the market as that Gorilla Glue part where it just grabs on and nothing stops it. It just, people don't believe it can keep doing it, and it does. Be aware that could happen. In the dollar index, we're suddenly going very much sideways. Now, this whole time we had stepped and kept making the general pattern of higher lows, higher highs to this one break right here. We came back, we set ourselves up with a pattern of lower highs and lower lows, and that all comes unglued. If you get up and over, right here, 106.56.5, the bull trend appears again. Now, I could not possibly tell a trader you're buying it there and you're trying to come out at 106.80. I mean, it's 30 points. But on pullbacks to the 18-day average, if that happened, I think the pros will show up on the long side and then look at stops under today's low. Another thing about today's low, what kind of day is today? It's an outside day to the upside. You took out the prior day's high and low. So unless you take out today's low on Thursday or Friday, this is a pattern that could be called a continuation pattern, and it often results in the market going up above it to potentially, the word is potentially, the upper Bollinger Band. That's the closest number. It's not a key moving average. When I come to the eurocurrency, if that is bullish, this should be bearish. And is this going to roll over? Again, let's really look at the market. Take the name off the chart. I see sideways action developing. Does it look to me like I should tell my client to deploy new money? Well, if the market takes out this low, I will have the pattern of lower highs, lower lows, setting up the potential for the 105 area. That will show up. Would I want to sell it deep down like that to get there? No, but I'd probably tell them to sell on rallies. I'm just telling you the thoughts that I have, so I've got to be ready. The British pound. The British pound's one of these charts that I thought would go to the upside more to the downside. In looking, what happens to somebody like me that's in the business of telling traders, buy here, sell there? When there's nothing to do, the pressure comes on you because the clients want something to do. I am not a day trader. I'm trying to catch moves, and as you can see, they're choppy as can be. Show me anything other than the bonds and notes, and they have not been an easy trade to get involved in. That's been the problem. They're just laying down. If this market breaks away from here, probably going to 120.72. If instead of taking out this low, the current low of 127, it can reverse up and gets over 122.15, it's probably going to 123 area. Flip a coin, it can go either way. In Bitcoin, I saw today Gary Gensler. He did an interview on TV, and boy, it was a great interview because he was drilled about all the ETFs that his staff is now reviewing. Is he going to release them all at one time? Are they going to license these people to have the ETF? Because they did lose the case. They didn't appeal it. He refuses to tip his hand. He was asked, are you going to release all the ETFs at one time or one at a time? Refused to lift his hand, but he's got to do something pretty soon. The courts will be on him, so will the ETFs. So that's what you're holding for. And when they come out, you have a new asset class that you can trade instead of going to those Bitcoin type exchanges where you can trade an ETF that is backed by something on the New York Stock Exchange, on the NASDAQ. It'll be in different spots, all right? So something to look at, but it's not bearish news. Long term, that's bullish news. Then we get to the Brent versus WTI crude. So Iran is trying to weaponize oil again. It called for an embargo against Israel. Now, I got to thinking about, is Iran going to enter the war? Because they keep threatening and saying they are at the point of no return for them. I am convinced they will not enter the war. I came to that decision today. They've got all their proxies. The only way they'll go into the war is Hezbollah gets destroyed if they attack Israel. Hamas, I think they wouldn't let Hamas go. After what's happened, no matter what and how rough their talk's going to be, they have to make some serious decisions on a world stage. And they have a lot to lose because their oil fields are all exposed. I really believe what I am saying. Said it on now, I've done a bunch of TV interviews, and I said, well, I'm the only one talking this because nobody wants to see that happen because oil would go $150 probably instantly a barrel. That'd be my guess because you could lose 2-3 million barrels a day of production if Israel were to attack the open targets. Of course, the retaliation would be unbelievable from Iran on Israel. The United States would have 2 warships, fleets, I should say, because they're going to have 2 carrier groups there to defend Israel. I think it nullifies everything, is my point. I'm not making a war. I'm trying to tell you I think it changes the pattern here. That doesn't stop events from Syria coming, from Lebanon coming, different things. But I think those will be more nuisance items than the war against Hamas. And I am not convinced that Israel yet can go in with its army and do anything. I think Israel's looking at world opinion and trying to figure out, what do I do? And I think that's it. The anger, the hate, the wanting to kill every one of them, it's there. How do you do it without hurting the population? That is their argument. I'm not saying it's right or wrong, so don't write me about that. That is what their dilemma is. They're on the world stage for that. So when you come to crude, I'm certainly in the bull camp. I mean, there's too many variables here that are bullish, all right? But support's back here. You're overbought. If you go, you got to be looking in January. Brent is possibly $94. You got to say in WTI crude, it looks like a better buy than Brent. Yes. If you can reach down here at 85, at least you got a risk that's reasonable at 100 and some odd points, okay? That's going to be what a lot of traders say. They're going to say it's not overbought. If you can get down there, it's throwaway money. I want to own oil for a piece and see can it go because something bad's going to happen. That's one of the trades. Heating oil. Support's back here at 301. If the market does get under 299.54, short term, it actually turns bearish. But it's hard for me to want to be bearish on heating oil during all this, number one. Number two, with winter coming. Eventually, it will get cold. By the way, we're going to be 70 in Chicago this week. This is unbelievable, mid-October. And then we'll be, in the nighttime, by the way, we're in the 40s. Some of the suburbs are in the 30s. But we are still reaching up like that. Natural gas is still bearish. Why is natural gas bearish? Because the Permian Basin and our other wells are operating at full bore. And as they're operating and they're producing, the byproduct is this natural gas. There is plenty of it. The good news is in Australia, Chevron has reached a deal with the union workers. It looks like it's a real deal. So that production that could have been shut in again, and that was coming up, I think this weekend, doesn't look like it will be. So I'm starting to join ready into the bear camp if you can stay under all this, looking for another leg down. Now, the fundamentals, you got to pay attention. It's not like you have really big supplies of natural gas. We have been going through it. Got to look in oil too at Cushing, Oklahoma. We have supplies down there that are, I think, 14-year lows. So it's not as though we're awash with oil. The Biden administration has drained a lot of the SPR. The other parts of the market with demand are draining the Cushing area. Oil, it's easier to be bullish than bearish. Keep that in the back of your mind as to whatever you're looking at there. Let's see what else we have. And that's it for the quotes here. So, want to find out what we're doing? Because this is the time you want to see it. We put out newsletters all evening up until typically 8, 9 at night. They start again about 5 in the morning. We cover all the markets. We're futures people. So I don't care if you're looking at the currency markets, the grain markets, the soft markets, the interest rates, the stock indices. If you're looking at any of these markets to trade futures, we write on the option strategies, What are the spread relationships doing? The cash markets. Often who's doing the what? Buying and selling. What are the commercials doing? We back it up with chart action and back it up with data. A lot of you that are data freaks and you want what's the open interest doing that? We review it in detail and we write on it left and right. So if you're looking for real research on the futures, I think we have the best in the business. Go to iraepstein.com, look at the free research programs that we have, give them a try. You can move your cursor to the top here. They'll come to you via email. I think you'll find it fascinating. You have a good day. I'll talk to you tomorrow.